Hello, my name's Jim Wade. I'm a tax attorney here in Maine. And in this episode, we're going to be talking about uh, going back to a previous topic we discussed, which is if you're subject to a CP 2000, which I call an IRS stealth audit. Basically, if there's some sort of information like income that the IRS believes was not reported correctly on your return, you'll get the CP 2000 notice. We talked about what it is, how to deal with it, and what to do if you disagree. But what we're going to be talking about today is, well, what if you get a notice from the IRS, the CP 2000 or IRS stealth audit letter, and you believe the IRS is potentially right? You don't necessarily disagree. So we're going to talk about what you can do. So first, when you look at what the CP 2000 notice says, as I explained in my previous video, look at the letter. It'll tell you usually on the second or third page what the IRS is proposing to change on the return. Look to see if you think the IRS is right about that income source. Look to see if there's any offsetting deductions or credits you might not have claimed. I just had someone come to me who had a CP 2000 notice, and the IRS said that certain income he received should have been reported as self-employment income. And he had been treated as just sort of other income. Well, there is a possibility that he might qualify for what they call the qualified business income deduction, which would offset some of the income that the IRS is proposing to tax. The IRS is, if they're proposing a change to your tax return, they're not going to give you any credits or deductions. They're just going to say, here's the income, we're going to charge you for it. You may have some offsetting deductions or credits that you could claim. Maybe you just filed a return, not really thinking about it, just reported your income, maybe a couple expenses, and just forgot something. Well, you might not have taken the time because you didn't think you owed any additional money to look for other deductions or credits. Well, now you may be able to go back and see if there's something else out there which might reduce the amount that's owed. Or in some cases, you may even end up with a refund. Who knows? But take a look first at the return that the IRS is proposing to change to see if there's anything out there that might be able to offset it. Two, penalties can still be challenged. Oftentimes, the IRS will assess what they call an accuracy-related penalty, meaning that if the additional tax is, I believe, over a total of $5,000 or more than a change of more than 20% in the total income report on the return. That number may be wrong, but usually if the change in tax, the delta as it were, is more than a certain amount, the IRS will hit you with an accuracy-related penalty. You can challenge that. So maybe the income wasn't reported, but you might have a reason why either you thought it wasn't taxable, maybe an accountant told you it wasn't taxable, maybe there was something going on in your life which kept you from maybe preparing a proper return, death, disability, other things. So even though you may agree with the IRS about what needs to be added to the return in the form of additional income or other changes to the return, doesn't mean you can't challenge any penalties if they're there. If all of that fails, you still have options regarding payment. You don't have to just immediately pay it, you know, and that's your only option. You do have other options. Let's talk about those real quick. I've talked about these in other episodes, but it's always good going back over it again because this is sort of my toolkit. This is what I go to when someone comes to me and says, I owe money to the IRS. Well, first thing you do is you can set up a payment plan. IRS calls that an installment agreement. So you can pay it over time. You can stretch it out. The IRS now has a new program where if you're not dealing with someone called a revenue officer in the field, as they call it, meaning you're dealing with someone who's come to your office or come to your home and says, hey, you owe money. If you're not dealing with them, you're dealing with what they call automated collection service. Once a bill has been issued, if it's under $250,000, you can call up the IRS, set up a payment plan up to what they call the collection statute, usually 10 years, and pay it over time in an amount that might work for you. If that payment is not, it's not something you can afford, you can also send in financial information and set up one that works for your budget. You could also get what they call hardship status. So hardship status just means that, based on your financial situation, it would be hard for you to meet your basic living expenses, food, clothing, current taxes, and also pay the back taxes. When that happens, you get put in what they call currently not collectible status. The IRS will not actively seek to collect the back taxes. Doesn't mean it goes away, but you won't be required to make any payments until your situation changes or the debt expires. Usually, like I said, 10 years. That can be changed for other reasons like filing an offer, which we're going to talk about next. You can also settle any of this liability with the IRS through what they call an offer and compromise. This isn't really the place to go into all the details of an offer, but if your financial situation justifies it, basically, you're broke or there's no way you're ever going to pay the tax due, you might be able to offer the IRS a certain amount to settle the full debt. Also, as I mentioned earlier, penalty abatement. You can always seek to have the penalties abated as an option to reduce what you owe. It won't get rid of the complete amount of the taxes you owe, but if there's a penalty assessed, you might be able to get it abated. Interest, however, is what they call statutory, meaning generally you've got to always pay interest if there's a tax liability. But those are your four big options. You can also potentially file bankruptcy depending on how there's a very complicated rules regarding what tax is dischargeable and what is not. But if you otherwise qualify, you might be able to do bankruptcy. I didn't put it here because generally when something is assessed immediately, bankruptcy is not an option that comes, it comes to mind. For most people, it's let's try to work it out. But there may be a need if the IRS is really coming after you where you might be able to do bankruptcy. And there's some other options out there, but those are the biggies. With that, I hope you found this helpful because even if the IRS is right and the CP 2000 or stealth audit, that doesn't mean you're not without options. So don't immediately just send them money or just agree. Take a look at what's on there. You may have some options for getting this at least resolved in your favor, even if not completely, at least somewhat. With that, have a wonderful day. It was great talking to you again.